Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. And today we're going to be talking about AVA Credit Builder and the instant $2,500 trade line that you could be approved for with no credit check. So back in 2023, as I was rebuilding my credit, I was searching for credit cards that I could be approved for, and I came across AVA. Now, I had no idea what this was. I read some reviews, but I wasn't quite sure. It was very new at the time, at least for me. And I've had this account for over 2 years, and I want to go through all the products that they offer and my personal review and experience using this AVA Credit Builder app. At any point in this video, if you'd like to sign up for AVA, there is a link in the description. You'll also get $5 when you sign up. So without further ado, let's get right into the video. Let's start by discussing who AVA actually is. Now, AVA is a credit building app that was designed to help you boost your credit score. Even if you don't have a credit history or your score is less than stellar, it offers a simple, user-friendly experience and is especially great for people who have struggled with establishing credit in the past. So in my personal situation, I was looking for a credit card that I can get approved for. At the time, I had a lot of charge-offs, so I was not getting approved for any credit cards. I also tried the secure card route. However, all of the secure card options, at least as far as my credit report was showing, it was a very low limits because I'd have to put up capital, my own cash, in order to actually fund this credit line. So when it came to AVA, having a credit line that would report $2,500 and help me build credit was very important for me. Now, AVA did actually help me build credit fast. 74% of AVA members see a credit score improvement in less than 7 days, and I'll go over that and exactly how that works. AVA offers two products that work differently, but they both do help you build credit as long as you're using them responsibly and you're managing your timely payments. Both accounts report to all three major bureaus, which is very important. And this is going to be TransUnion, Equifax, and Experian. And it reports it within the first week of you joining AVA. So you can possibly see the AVA trade line on your credit report within 1 week. The goal is to help you add credit history as soon as possible. Once again, 74% of people that use this saw improvements, including myself. Moreover, your on-time payments are reported within 24 hours. So that's going to help you increase your credit score a lot in a very short period of time. And this is an instant approval. So AVA does not check your credit score when you apply, and there's no credit score requirements. There are no interest charges as well. So there really is nothing to lose by you actually signing up for this product. The first product we're going over is the AVA Credit Builder card. This, once again, has no credit check, no interest, no deposit like a secure card, and it has no annual fee. Now, the way that this card works is similar to any other credit card, but it has a built-in feature that is meant to help you spend responsibly and build credit history. So you'll have a credit limit that's reported. It's up to $2,500 and the ability to use your AVA Credit Builder card on more than 60 online merchants that are approved by AVA. Now, I did list some of those merchants here, and we'll go over that in a second. Now, this can help your on-time payment ratio, which is 35% of your credit score. It can also improve your credit card utilization, which is 30% of your overall credit score. Both your utilization and on-time payments can be reported within 24 hours to the credit bureaus, and that's how you're going to see a vast improvement in your credit score in a very short period of time. I set the AVA Credit Builder card as my primary payment method for most of my subscriptions like Netflix, Spotify, Hulu, Cox, and there are some other ones here that you could take a look at, but the AVA card would be charged for my subscriptions, and then I would pay them off by linking the AVA card to my bank account. I would pay for the subscriptions, help build my credit, automatically pay for those things with my bank account, and I never had any late payments or anything like that. So it was a very, very easy setup for me to use this and pay for things that I was, already going to pay for anyway, while also building credit. Now, AVA will not let you use the entire $2,500 that's reported. Instead, it caps your spend limit each month to keep your utilization low, which is optimal for maximizing your credit score. So for example, if the AVA Credit Builder card is $2,500, 5% of $2,500 would be $125. So AVA might give you a spend limit of, let's say, $125, and then you could use up to that amount in order to pay off all of your subscriptions. Now, the lower your utilization, the higher your credit score will be. But you need to be paying for something. No activity does not help your credit score, because remember, a credit score is a report of how well you pay on time. You have to participate in paying off debt in order to build credit. If you don't, then you just won't generate a credit score, right? So you need to be paying off something, but the lower the amount that you're using as opposed to how much credit line you have available will maximize your credit score. Once again, 35% is on-time payments, 30% is utilization. So you need to have a credit card to be able to maximize on both of these. Now, to my knowledge, you'll only be able to access $25 when you first start using AVA Credit Builder card. That's 1%. Pretty much they put you in the perfect percentage to have the lowest utilization possible. That's going to help maximize your credit score in the very beginning. Now, as I use the card more and I saw that I was using another product, they would increase the amount that I can actually spend on the AVA card. I don't know what my maximum amount was, but I feel like it definitely got up to at least around $175, somewhere in that range. Now, the AVA card payment is due within 7 days after the AVA card is actually used. You'll need to at least have $100 linked to your bank account for automatic payments to go through. Otherwise, it will decline. And while there are no late fees or penalties for that, the late payments can be reported to the credit bureaus, which will hurt your credit score. And I've said this in past videos, if you had a perfect 850 credit score and you got one late payment, that could drop your score 100 points. So it's really, really important that you pay this on time, even though it's just a credit builder. It's the same as any other credit card. It doesn't matter what product that you have, an auto loan, installment loan, anything. If you don't pay it on time, the late payment still occurs and the same thing happens. So like I've said in many videos, credit building is a zero-sum game. You need to be perfect in order for your credit to be stellar, not one blemish. The cost of AVA is really straightforward. AVA charges a subscription fee of $6 per month when you sign up for the annual plan. So you could look at that as $6 a month or $72 for the entire year. Now, the month-to-month subscription fee is $9 or $108 per year. You can pretty much pick whichever one that you would like. I think for the ability to actually have a $2,500 Tradeline report to your credit, especially when you're in the rebuilding phase, $72 is not a big deal to just pay for the entire year. Or if you would rather be month to month, then it's only $9, and then that's just $108 for the entire year. Whichever way you prefer, it doesn't really matter. And AVA also has other products and services that you can use that are included with this same monthly fee. And then we're going to go over those products next. The Save and Build credit account is an additional product included with your AVA service fee. So you're already paying for this particular product when you pay for AVA. Now, the credit builder loan has no interest charges. There's no credit check. There's no late fees. It does require an existing bank account for payments so that you can set that up and you can actually save your payments. And it works like this. You pay or you set aside, however you want to look at it, between $25 and $100 per month. This loan is secured, so you will get all your money back after the term is over and you've made all the payments. These are monthly installments that go to AVA. They're placed in the Saving Builder account. This account doesn't earn interest, so unfortunately you won't be able to earn any additional money, but each payment is reported to the credit bureaus. After 12 months, you receive the full amount. It's released straight back to you, and it can be anywhere from $300 if you did $25 per month or $1,200 if you decided to do $100 for 12 months. AVA doesn't charge a finance fee. There is no APR for this service. So you're simply just committing to saving money that requires a monthly contribution and helps build your credit history. I think for that, it's a pretty straightforward thing, and there really is no reason why you shouldn't do it. However, just like any other form of credit, late payments can be reported to the credit bureaus, which can harm your credit score. Again, there's no late fee, but if you did not pay this on time, like anything else, it will report. Any other credit building loan will charge you APR or a financing fee to cover the service. But since AVA doesn't charge you a finance fee and you're already paying the monthly subscription of either $6 to $9, it feels like the Save and Build credit account is an additional product for the service fee that you already pay. I mean, technically it is. With every on-time payment, your credit is positively impacted and becomes good payment history, and in 24 hours it gets reported. So if you have the AVA card and you have this account, instead of doing 12 on-time payments in a year, you'll stack 24. So it's just double. It can definitely help you. This account also helps with credit mix. The Save and Build Credit account will be categorized as an installment loan. Credit mix is 10% of your overall score. So a good credit mix will demonstrate your ability to manage different types of debt. Now you're impacting 75% of your overall credit score, 35% for on-time payments and payment history, 30% for utilization, and 10% for your credit mix. This will help you save money and build your credit all at the same time. So I think it's a really good product. Again, very straightforward, very easy to use. AVA also has a rent reporting feature that allows you to report your rent payments to all 3 credit bureaus. However, this is only available to some users at this time. When I log on to my AVA app, I'm actually able to see it, and it looks just like this. You won't find this listed on their website either, but it's expected that this will be available to all users this year in 2025. So you could set this up very easily if the option is available to you. You connect your bank where you pay your rent from using Plaid. You then follow the instructions to register your rent details, and then AVA will report your monthly rent payments to all 3 bureaus, which helps you build credit and improve your history. So now you can have 36 accounts as well. In this one, if you have rent, this might look like an installment loan that could be $2,000 to $1,500, $3,000 a month, which once again, just continuously helps you build your credit score for things that you are already going to pay or to simply save money. So if you do have the option to use this, I think it's worth it. Once again, it's no additional cost. It's already included with your AVA subscription. So realistically, if you have the option, there are 3 accounts that you have in total to help build your credit score overall. Now, is AVA worth it? Technically, you can build your credit with any credit card, and for the most part, you can do it for free. But we do have to keep in mind who this product is geared towards. So for me right now, where I'm currently at, I actually still have my AVA credit card still reporting to my credit report simply because it has a lot of history. So when I go to get a mortgage loan, eventually that's what I plan on doing. I probably will stop using AVA sometime next year, maybe even this year. It just kind of depends. But traditional credit cards require you to have a credit check. You have to get approved. And even if you're looking for a secure card, you still have to give a deposit. Not to mention, a lot of times secure cards have annual fees. You'll also be subjected to higher APR. Now, if your goal is to build credit, just to build credit, like that's it. This is a much simpler and, to me, much better alternative. It puts you in position to always have perfect utilization. A $2,500 limit for someone who's rebuilding credit is pretty good. Most secure card options, a lot of people start with $500, things like that. And even if you got a secure card, like I got a secure card at the same time that I got AVA, I just use this and that secure card both in combination to just help build my credit score. Now, AVA reports to all 3 credit bureaus, and that's for all of their products. They do it on a weekly basis to ensure that your score sees improvement as quickly as possible. So with all that being said, if you were looking for something to get started while you were rebuilding your credit, I do believe this is a great product for you to use, whether it be the secured loan builder or whether it be the credit card or whether it be even rent reporting. All of these options are good. Only drawback is that if you have a late payment, they will report it. The only way that you can combat that is to set up automatic payments and make sure that it's at an account where you'll always have a balance. As long as you do that, you really can't fail. Like that's the only way for you to fail. But also with any credit card, if the same thing was to occur, same difference. It's going to report, it'll hurt your credit. So that's really the only risk to you. Other than that, I think for the price, it is worth it. Once you are able to actually get some unsecured credit cards and your credit is cleaned up, do I feel like you still need it? No. After that, you can really get rid of it. I would say the only difficult part is that you do build some history with this. It will be one of your older accounts, but it will still stay on your credit report for 7 years, even after you stop using it. So either way, like when it's all said and done, I think it is a great tool on your way to building credit. when you can't get a secure card or you can't get an unsecured card, or if you don't have the means to do a secure card deposit. Any of those situations, yes, I do believe this is worth it. So currently I'm on the AVA website and they had some illustrations that I thought were just perfect to use as an example. And it says a good credit score makes a big difference. So this shows an example of a consolidation loan and how much more you have to pay when your credit is, maybe at 600 as opposed to being at 740. So there's someone named Derek who has a credit score of 600. His interest rate is 19.5%. In this example, Derek pays an additional $2,345 as opposed to Pam. Now, this is 6 months after using AVA. Pam improved her credit score to 740, and she got to save that because she had a lower interest rate. Now, of course, these illustrations aren't, real people, but like even this comparison right here is kind of like dramatic, like 19.5 to 4.5. Chances are you're not getting an interest rate like that. So it is an exaggeration, but hopefully you understand exactly what they're trying to actually, paint the picture for here. So an auto loan in this situation, Peter's at 650, and we talked about this even in other videos, but this car is $21,700. Now look at the difference. One person, Peter's going to pay $32,465 at 12%. And then this person, Mary, with a 720 credit score is going to pay 4.25%. The difference that they're going to save where they're buying the exact same thing is $6,000 overall. Now, this one is actually very normal. This is a very normal comparison that you could draw that really can happen. This is very realistic. You might save $6,000 in the course of a 72-month term just by using something like AVA for a short period of time to help boost your credit score. Now, the last one is your mortgage. Now, your home loan for 30 months is $326,000. In this example, I'm going to be honest, there's a lot of scoring models where I don't think that they consider some of these fintech banks as weighted scores. Like, I don't know if it actually helps that much. So I can't say like feasibly this actually makes sense. For a consolidation loan, possibly. For an auto loan, possibly. For a home loan, I'm not quite sure. But if you look at this, it does say that for Joe's going to pay $3,850, and then comparatively, Sally would pay $2,326, and then that's going to be a difference of $26,000. Once again, this one is kind of a gross exaggeration. The auto loan is very realistic. The consolidation loan interest rate, 4.5%, is very unrealistic. You're not going to see loans this low, but the point that it's trying to illustrate is already, well said. The point is that if you are someone that, let's say, doesn't have any derogatory marks, you don't have any late payments, you're just trying to just build credit for the first time, like you're new to credit, or maybe it's been 7 years, all of your old debt has fallen off, and now you're in the process of trying to get approved for things, but you're finding that you're not. This might be the thing that will take you from a 600 credit score to like a 680, close to the low 700 range. Then that might put you in position to get a car at a lower interest rate, maybe the credit card that you're looking for, your auto loan at a lower interest rate, possibly can even help with your mortgage. That is a realistic possibility. It could help with that. So in those situations, it's like, what do you think that it's worth in the end? What do you think that it is worth? Is it worth $72 in a year or $108 in a year for you to potentially save this much money? And then, that all depends on your perspective and how you feel about this. Thank you guys so much for watching this video. If you found this information useful, please let me know in the comments. If you've used AVA before, share your experiences. I'm only going to recommend stuff that I've personally used and it really did help me. So for me, it did help. Other people have other experiences. When I did the AVA Credit Builder loan, they automatically, I think, tried to sign me up for another one. And I had to contact them and tell them that I didn't want to do another one later on. I think that may have been the one thing that I really didn't like. Other than that, my experience has been really good overall. Give me your experience. Let me know in the comments below if you've used AVA. Did you like it? Did you enjoy it? Like, let me know exactly what this did for you. Or if you've never used it before, there's a link in the description that you can click on right now If you sign up, you'll get $5 just for the sign up. So again, that link is in the description. Thank you so much for watching this video, and you guys have a wonderful day.